Hello and welcome to today's Market in a Minute for Friday, May 26th. This webinar is brought to you by OctaFX, the award-winning Forex broker, offering you some of the lowest spreads in the industry. Let's jump right in. First of all, let's take a look at the US dollar. Yesterday we saw the broad-based benchmark index, the S&P 500, post fresh record close, second day in a row. US stock market on fire right now. Wednesday, the big story was the FOMC minutes, when we basically got a signal that rate hike is coming soon. We have a very high probability of a rate hike in this next meeting coming up in June, something that boosts the US dollar. Initial jobless claims rose slightly less than expected, signaling stronger jobs market. The weekly jobless claims it's a weekly number and came in slightly better. Another thing, giving the dollar a slight boost. Another big story from yesterday was the OPEC meeting. We saw the dollar rally against commodity currencies, Canadian dollar, Australian dollar, and New Zealand dollar, and we saw a particularly sharp rally in the dollar against the Canadian dollar. Oops, missed the point there. And today we've got durable goods orders and preliminary GDP coming up, so watch out for those figures later today for if you're trading in pairs with the US dollar in them. Next up, the euro. Euro was slightly lower on Thursday. Not a great deal of news coming out in the Eurozone yesterday. Wednesday we saw Draghi speaking in Madrid, basically sticking to his mandate of low interest rates and quantitative easing, something that's putting pressure on the euro. We got overhead resistance at about 113.05, and we can see price consolidating below there in the 112 handle. And broadly, we can point to the reduction in political uncertainty after the French election as something that's boosted the euro. We got the inverse happening in the United States, more political uncertainty with the investigation of the Trump presidential campaign. So we have another divergent atmosphere, instance of divergence between Europe and the United States there. Next up, let's take a look at the British pound. British pound pushed lower by a weaker GDP release, weaker than expected UK GDP growth. That was the big story in the pound yesterday. We're starting to see concern over the negative consequences of Brexit appear in the market and put a little pressure on the British pound. Another thing that is playing a role in the British pound right now, of course, is the terror attack in Manchester that happened earlier this week, the tragic attack. And we saw the UK raise its terror threat to critical, something that pressured the pound and is keeping it kind of, perhaps keeping it below that key 130 level. So yeah, as I said, cable or pound against the dollar remains close to the key 130 level and slightly below it. Next up, the big story of the day yesterday was crude oil. There was the OPEC meeting in Vienna, and crude actually fell back below $50 on news of the OPEC output cut extension. What happened was OPEC members agreed to extend output cuts for 9 months, but the market was analysts were actually expecting more. Investors were hoping for more cuts. So as a reaction, they actually sold crude oil. So investors had hoped the cartel might reduce output further, perhaps to 12 months instead of 9 months, and in that way support oil prices and manage the global glut, which has been going on for about 3 years now. Again, we can talk about the commodity currencies, notably the Canadian dollar, and offer that disappointment. The Canadian dollar, which usually trades in line with oil, was sharply lower after that news. And that concludes it for our Market in a Minute today. Do join us at 1:30, and look forward to speaking with you later.